Okay, so you know what's really buzzing right now? It's May 10th, 2025.
Right.
And everyone's talking about former President Trump's idea that 80% tariff on China. The markets feel a bit, well, hesitant, wouldn't you say?
They definitely do. A sort of cautious pause. And for this deep dive, I imagine you listening are probably wondering, okay, how do I navigate this as an investor? I mean, in 2025,
Exactly.
our goal here is really to try and, cut through some of that noise.
Yeah, precisely. We're not just reacting to today's headlines. We're going deeper, actually digging into some timeless wisdom, specifically The Intelligent Investor.
Benjamin Graham.
Benjamin Graham, yeah. I mean, it's a book Warren Buffett constantly recommends.
It really is. It's a foundational text, and it stays incredibly relevant. What's fascinating, especially with this proposed tariff floating around, is Graham's core message.
Which is?
It's all about disciplined investing. He
Yeah.
really pushed understanding a company's actual worth, its fundamental value,
Mm.
rather than just getting swept up in like market sentiment or day-to-day fluctuations.
So keeping emotion out of it. Or trying to, anyway.
Controlling that emotional reaction is key to his philosophy.
Okay, so back to May 10th, 2025. This 80% tariff idea drops. But the market actually ticked up slightly. 0.35% gain? That seems odd.
It does seem counterintuitive at first glance.
Yeah.
But what's really striking is while the market had that small gain, we're also seeing reports indicating a pretty massive 60% drop in U.S.-China trade.
60%?
Yeah.
Yeah.
So that's a tangible real-world consequence already happening. It suggests maybe that initial market reaction, that little bump, doesn't capture the whole picture.
And it sounds like some people are feeling that disconnect, too. I've seen comments online, folks on X mentioning this kind of numbness almost, like tariff news isn't new.
Right. There's a bit of fatigue.
But they also seem to get that 80%. Well,
Yep.
that's a whole different level.
It really is. An 80% tariff isn't just tweaking things, it's potentially prohibitive.
Yeah.
And one big economic implication for you to think about is inflation.
Which is already, what, 4%?
Currently at 4%, yeah. A tariff that high could seriously push prices up even more as imports get way more expensive. That's a major risk.
Okay, so with potential inflation, market jitters, this general uncertainty, how does Graham's thinking, that long-term view, actually help?
Well, this is exactly where his value investing approach shines. When you're facing economic headwinds and potential volatility. And look, maybe 60% of economists hypothetically see more volatility this year. Graham says focus.
Focus on what?
Focus on identifying companies that are fundamentally solid but maybe undervalued by a panicked market. He wouldn't advise dumping good investments just because a tariff scare sends prices down temporarily.
That's a whole Mr. Market idea, isn't it?
Exactly. Treating the market like this manic depressive partner. Sometimes he's overly optimistic, sometimes way too pessimistic. Graham says you use those mood swings, especially the pessimism, to find bargains based on real value, not fleeting emotions.
Which brings us neatly to Warren Buffett. He's not just read Graham, he lives it.
He absolutely does. Buffett consistently points back to the intelligent investor for its enduring strategies. It's not just lip service. You see it in his actions.
And he's weighted on tariffs recently, too, hasn't he?
He has. He pretty bluntly called Trump's tariffs a big mistake, which, strongly echoes that need for a disciplined, value-first approach, particularly in this kind of trade climate we're seeing in 2025. You see these debates playing out online, too, like on X.
It's interesting this whole situation ties into themes we've touched on before, doesn't it? Like the economic shifts back in EP72 and even the broader societal trends from EP75.
It really connects. Think about it. Picture an investor right now in 2025 who's truly absorbed Graham's principles.
Okay.
This tariff news hits, the market gets choppy. Instead of hitting the panic button, they're calm. They're maybe even looking deeper, researching companies whose underlying business is strong, regardless of this temporary storm.
Seeing potential opportunity where others see only risk.
Precisely. They might even use the fear-driven sell-off to buy solid companies at a discount. That's pure Graham.
So boiling it all down, if you're listening and trying to figure out how to react to this tariff talk, or any market volatility really, what's the core message?
I think the main takeaway is this. In uncertain times, like these trade discussions and proposed tariffs, sticking to a disciplined, long-term plan focused on fundamental value, that's the heart of Graham's intelligent investor, it's Buffett's core philosophy, that's probably your most reliable compass.
A focus on value over noise. That makes sense. So maybe here's a final thought to chew on.
Okay.
If you consistently applied that value-based approach, really committed to it, how might that change your whole perspective on the daily market news, the short-term swings, and how they actually relate or don't relate to your long-term financial goals, especially as the global trade picture keeps shifting?
That's about separating the signal from the noise.
Exactly, shifting focus from the fleeting headlines to, well, enduring value.